Hello guys, welcome to the Trade with UFOs Solid as a Stock session. My name is Becky Hayman. I'll be taking the session today. My email address is there. It is sideways, but hopefully you guys can read it. It's becky@traddictiv.com. So if you have questions about anything I covered today, then you can email me on that. Or you can use the tradewithufos.com/Becky link that we have here on the screen. So let me just highlight it there. So if you go to that link, I'll just show you now. If you go to that link, it will take you to this page. At the bottom here, there is a questions and answers section. So if you go to that link, you can ask a question on here directly. It comes through to my page and I can then answer it. The beauty of that, as opposed to emailing me, is that other people can see the answers to the questions. Other people can see what you're asking. So it's good for the entire community to understand different concepts, that it might not just be you that has a question on it, it might be other people as well. So they benefit from it and you also benefit from seeing other people's questions. Now it says here you do not have permission to ask a question. That's because we're not logged into our free membership account. So you can also use this link to set yourself up with a free Trade with UFOs membership. So all you need to do is just fill in your full name, email address, and then click I'm not a robot, and then click here for the next step and just follow the steps. And then you can set up your own free Trade with UFOs membership account. So one of the benefits of that is that you can access the questions and answer section, but you'll also get discounts sent to you occasionally. You'll get recordings of the sessions, and you will get the sessions that we do on YouTube, and you will get sort of reminders for the upcoming sessions that we have as well. So you can all do that through tradewithufos.com/Becky. Another thing that you can use with that specific link is you can book one-on-one coaching with me if you choose to. Same is true for the other coaches, by the way. So if you were to go to tradewithufos.com/Boyan, then you would be able to book directly with him. So you can use that link depending on which coaches you prefer. And again, you can use it to set up your membership. So if we just go back to that screen there, so that's that link. I'm just going to put the disclaimers or highlight the disclaimers there. You'll see at the top that they are being highlighted. It is important that you guys read them, not just for legal reasons and compliance reasons, but it is important to understand, of course, the risk involved with trading and what you can expect from these sessions. So I'll give you guys a couple more seconds to just read that. Okay, I've just seen there that the sound is good. Good, I should have checked that. So thank you for letting me know. So before we start this session, just whilst I'm sort of reminded of the chat here, if you have any questions as we go, I know it's sort of a YouTube environment as opposed to a closed environment, and sometimes that makes people a little bit more apprehensive to ask questions as it's so public, but please do. Again, I'm sure if you have questions, other people will have them too. So it's great for me to see your questions as they come in, any comments that you have, any stocks you want me to look at, anything like that. Please don't be shy, please engage so that we can make the most out of it for you. Make sure that you get the best out of it. Just seen from there from Paul. I'm sorry I'm late arriving. Hope I haven't missed too much. No, only just started, so you're fine, Paul. So again, those that are watching live, of course, interact, ask questions. Those that are watching recorded, again, you can ask me questions by either going to that link that we have there on that page, tradewithufos.com/Becky, or you can email me at my email address. Okay, so let's get cracking. Let's have a look here. First of all, you might not have joined me last time. But last time we went through a trade, which I'm just going to open up. I think it was on this one. There you go. We went through a trade and we went through ON Semiconductor Corp. Now, I know that might seem like a bit of a random stock. You'll notice as we go through these sessions, or at least the sessions that I do, I'm not particularly biased as to which stocks that I trade or which stocks that I might put trades on. For me, the most important thing is that the technology lines up and that essentially the technical element of it lines up. Of course, for those that trade fundamentally, you can layer that in as well. You might have other things that you look at outside of the technology that we use in order to help you determine which stocks to trade, which stocks to keep away from. For me, I just go by what are the ones that line up best with our technology. So again, if you guys have any suggestions of stocks you want me to look through, I'm happy to look through them. I'm just going to explain this trade that we put on last time. So this was a couple of weeks ago. We put on 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 a 55-minute chart. Now, of course, that was all the way down here. That was this trade all the way down here. The entry price for that was $24.62. And we are now roughly at about $27, $28. What that means is obviously we missed that trade and price went off. We can see here, price never came back. I don't know what that happens with my arrows sometimes. Price never came back and it just shot off. So we missed that trade, which is unfortunate because it would have been great to have been caught in that move, but sometimes that happens. Now, what we need to then look at when we're seeing trades that we looked at before is, are these trades that we want to keep on, or are they trades that we should be cancelling? The markets are an ever-moving, ever-changing beast, so we want to make sure that we are keeping up to date and not just keeping a trade on for the sake of it because we put effort into it in the past. If it's no longer valid, if the probabilities are no longer there, we don't want them out there taking up our margin potentially and obviously putting risk in the markets that shouldn't be there. So for this particular trade, of course, the entry price is 24.62. Current price is 27.88. So in order for us to be triggered into this trade, if we were to keep it on, price would have to move down from the point it is now in order to come back here. And it would have to move down $3-4 or so. Now, if it does that, yes, great, that would trigger us into this trade. But by then, some things may have changed. So firstly, what we need to understand here when it comes to the climate is that we are already over the sustainability stats by quite a lot now. Obviously, a few days have passed since we first put this trade on. So normally, and we'll go through this in a second in more depth, but normally this market would go up for 5 candles on a daily chart. And we are on candle number 12, which means it's gone much further past what it normally does, which lowers our probability. So that's one thing that is kind of taking away from the validity of this trade. The other thing is that our EMA value at the moment is 27.65. So just underneath current price, about there. So if price were to shoot down in order to keep the EMA within our UFO, it would have to kind of come down reasonably slowly for the EMA to follow it. The EMA would then be dragging behind it, most probably, not in front of it, which means that we would more than likely have a downwards climate, which definitely invalidates the trade. So for many reasons, sustainability, unlikely to catch the EMA, and the fact that we're likely to have a change of climate by the time price gets down here, for many reasons, this trade is now invalid. If you put it on, we should be cancelling it. So I will be just deleting this off of my screen here so that it's no longer there. I'm no longer thinking about that trade. Now, we could reevaluate this market and decide whether or not we want to take another trade. But as we already said, we know that we are already far over the sustainability stats, which means if the market normally goes up for 5 candles and it's been going up for 12, it's gone more than twice past what is average, which means the probabilities go down significantly. Again, for me, I'm all about where are the probabilities based on the technology. And the technology is telling me lack of probabilities. So I don't want to be really looking at this market. But don't worry, there are loads of other stocks we can look at. And again, you can let me know. Hello there to Ron. I've just seen you say good morning. Nice to see you, Ron. Hopefully you enjoy our session today. Good to see you. Okay, so the first thing that I normally do is look at the general markets. So I'm going to look at the ES. I'm just going to go back to the screen here. I look at the ES just because that's obviously the S&P 500. It's the futures market of it. So obviously encapsulates more of the market movements outside of the normal stock sessions as well. That's why I tend to look at it. So we are looking at the top 500 US stocks all put together there as a futures contract. Now, looking at that just gives us a general idea of the market. That's not to say that we won't do things that might contradict with what the general market is doing. If a stock is showing us that it's a great idea based on the probabilities and technology to go short, then we'd still do that even if the general market is up. But again, the more probabilities we can add, the better. If the general market is up and we also have a long opportunity on another stock, then we have a correlation there. Correlation isn't the only reason we should get into a trade, and it's definitely not something that overrides anything else, but it's an additional sort of nice to have. So for me, that's why I want to know first what's the general market doing so that I can then kind of be more biased, I guess, when it comes to looking for the opportunities that we look for. Not to say I wouldn't go short, but if the general market is up, I'm more likely going to be looking for longs because then at least I know I've got that one thing in my account. So in general here on the weekly chart, we have 2 blue dots, 2 thick blue dots. So for those that might be really new to this, I'm just going to explain it. For those that have been using our technology a while, bear with me. I know you already know this, but bear with me. Can't hurt to have a recap. The auto climate there on the left-hand side is helping us answer the first question that we have. And the first question that we always have as traders, just see if I can put that in, is should I be long, short, or not trade? Particular emphasis on not trade. Most of the time, most trading formulas out there are designed to try and get people into the market because we want to be trading. We have this thing in life that we believe that time equals money. Therefore, the more time I spend putting trades on, the more things I do, the more money I make. That's not necessarily true. In fact, in the markets, it's better to be keeping out of those lower probability trades. Waste of time and money and opportunity to put trades on for the sake of it and end up losing money. We'd rather not trade at all and keep that money in our accounts. So we need to always be asking that question first. Should I be long, short, or not trade? So what the AutoClimate is telling us are where the probabilities lie. So we can have, like in this example, a thick blue dot that tells us that the climate is up and confirmed, meaning probabilities to the upside, we should be looking to go long. We could see a thick red dot, something like that. I can make that a bit bigger, there you go. We could see a thick red dot. That would tell us that there are probabilities to the downside, that we have a confirmed downwards climate, we should be looking to go short. Or we could have a thin dot of either colour. I'm just going to change the colour to a neutral one there to green. We could see a thin dot of either colour. The thin dot is telling us, whatever colour it is, that there is a lack of probabilities, and therefore we come back to this answer, which is not trade. So we're using the AutoClimate always to just make it a really easy answer. Is it thick or blue, or thick or red, or thin? If it's thick and blue, we look to go long. If it's thick and red, we look to go short. If it's thin, we don't do anything. So it answers that question very simply, very easily. With technology doing the majority of the work there for us, all we have to do is see the colour and the thickness of the dot. So in this case, we have a thick blue dot. So that tells us we have permission to go long. But there are other factors that we need to look at. I'm just going to make this a little bit bigger here. There we go. So we can see all these numbers. These three numbers here are the sustainability stats of our AutoClimate app. By the way, the AutoClimate app is free. So if you want to be able to get that, if you go to the tradewithufos.com/Becky and follow the steps, go through the membership account and then to the join page, you can download that AutoClimate app for free. So these three numbers here tell us, based on how long a market would normally go up for or normally go down for, and where are we relative to that. So again, it just gives us probability, it gives us statistics. So this first number shows us how long a market usually goes up for. I don't know why this happens with my arrows. There we go. And this number here tells us how long a market goes down for. And this number at the end tells us how long we've been going in that same direction so far. So at the moment, we can see that the general US markets on a weekly chart would go up for, I'm going to round up this number to 8 candles on a weekly chart. And we have been going up for 2, meaning we have probability of a continuous move to the upside. So not only do we have confirmed probability to the upside just on the climate by itself, but we also have probability that it continues to move upwards. So again, it gives us more likelihood, therefore, long opportunities. So it means as I now go to look at other stocks, I'm going to be prioritizing looking at the long opportunities that we have. Now, one other thing to look at, for me anyway, something that's important, if I go to this one, is the fxstreet.com economic calendar. Now, I filter it by high impact news, United States, so you can choose whichever country. I choose the States, and you can choose which time frame you want to see it for. Now, of course, if you live in other parts of the world and you might trade stocks in your country, I personally, you might tell from my accent, I don't live in the States, but I don't trade UK stocks. Main reason for that is because the majority of the volume and the liquidity is in the United States, is in the American markets. So I'm obviously filtering here by United States because I'm trading US stocks. I look at high impact news. You can look at lower, medium and low impact news. But again, I want to know what's going to have the biggest impact. A lot of the time, the price kind of reflects a lot of these news articles anyway. So the lower the expected impact, the less it really is significant to even think about. At least that's the way I think about it. So high impact news that I'll look at. And obviously we can see from this week that the only high impact news we had coming out was on Tuesday. Today is Friday. I apologise about my arrows there, guys. Don't know what's going on. So today is Friday, so we have no high impact news coming out today. It already happened this week. Now, one thing to bear in mind at the moment in US markets is that we are still kind of in this election bubble. Normally, the high volatility and the high impact from elections come out the day of, the election day. Of course, we had a little bit longer this time round to get the final votes in, but we're still obviously having a lot of things going on in the news before things are definitely finalised and before any kind of transition or not happens. So again, just bear in mind that these are things that could have high impact on the markets. If, for example, if Trump were to win one of his lawsuits, that would potentially have a high impact on the markets. If he loses a lawsuit, or if another count comes out in one of the big states that they're having this battle over, either way, it could have a big impact on the markets. What we want to try and do is take our bias out of it. Whatever we think about that politically is irrelevant really to what the markets are going to do. It may go in the way that we think. It may not go in the way that we think. It's kind of, up in the air. That's why we use our technology to give us objective probabilities. But just bear in mind that the things that are going on at the moment may bring volatility into the markets. That may mean we need to manage our risk maybe a little bit tighter or add more probabilities in our favor before we take trades. You guys with me so far on this? All making sense? Let me know if you have any questions or any specific stocks you want to look at. Whilst I wait for that, I'm just going to go to this tab here. So I will start a scan, or I've already started a scan. I'll just explain very briefly what these scans are. And then if in the meantime you guys have specific stocks you want me to look at, just let me know in the chat and I can go and look at those. So bearing in mind, we decided that based on the general market movements, we are going to be more prioritizing looking to go long. Now, a way to do that would be to just scan through specific markets you look at. You might have a watch list, maybe the FANG stocks, maybe specific ETFs that you look at, whatever it is. Again, for me, I try to not be attached to a particular stock, so I will just use scans. Now we have these two scans here, so you'll see we have it says directional up basically and directional down. That's what these two scans here are doing. Now, by the way, if you need those scans, you can just email us and we can send it to you, no problem. So in this one to the upside, this is showing us, and it's scanning multiple things. It's scanning volume, it's scanning where the price is relative to EMA and things like that. It will then give us a list of stocks that make sense to look at to the long side. Not to say that there's definitely opportunities there. We need to delve into them further, but it just reduces it down from thousands of stocks we could look at to, 23 stocks we could look at. And even within there, we can obviously pick the ones that make the most sense to us. This one here, the one just underneath it, is the directional down. Again, we are looking there to go short. So it's doing the same kind of scan, but it's looking for opportunities that make more sense to be short. Not surprising, there are less on this list. The general markets are to the upside, meaning that we only have, a handful, 3 opportunities here that would be good to go short. We're going to focus more on the upside again because the general markets are up. So we've got there from Ron, GDX. So let's go to GDX and then we'll come back to that scan. So just typed in there GDX. So this is a gold miners ETF. We are using here on this chart, Ron, we're using the weekly for our auto climate, and we are using the 144 for our AutoUFOs. Let me know if you want to change to a different time frame. I tend to stick to swing trading timeframes, just because for me that's the style that suits me best. Day trading has never really been something that I've really got into. It doesn't suit my personality as much. Not to say that there aren't great day trades to be had within the stock world, but bear in mind that stocks are probably the least efficient way to day trade. Normally, day trading would make more sense in highly leveraged markets so that the smaller movements are worth more money to you. So check out our futures sessions that we do and Forex sessions as well. They may be better for you if you are day trading. Again, not to say that you can't day trade stocks or that that's wrong. It's just where money is most efficient. So we'll stick for now then, I guess, on the weekly chart there for the auto climate and the 144-minute chart for the UFOs. Now, again, we are using on the left-hand side here with the auto climate, we are using that to answer the question, should we be long, short, or do nothing? Now, in this example, this is actually a short one. Now, bearing in mind the general market is up, so we lose correlation there. However, this is a gold ETF. Normally, gold is the other way around. Correlated, there's a word for it. Anyway, it's correlated backwards. I can't think of the actual term here. conversely correlated, reversely correlated, inversely correlated. There we go. It's inversely correlated to the US markets. So it's not surprising to see that gold or gold ETFs might be coming down, maybe as the US markets go up. By the way, that's not always true, just generally tends to be true. Inverse. Thank you there, Ron. I was struggling with that word. Okay, so we are looking here. It does actually match with our correlations because of the fact that it's usually inversely correlated. So we're looking here at a short opportunity or a potential short opportunity. So on the weekly, we have a thick red dot. That's what we see here. That tells us we have confirmed downwards climate probability to the downside. And another cool thing is that usually this particular market, this particular ETF would go down for 8 candles. I'm just rounding up that number. And we're on candle number 1. So we have probabilities of a continuous move there to the downside. So again, odds stacking up in our favor here so far. We've got an inversely correlated market doing what you would expect. We have a confirmed downwards climate, and we have probabilities that it continues down. So again, so far, everything is checkmarked. That's not to say we're going to take a trade. We still need to look at other things. Because the second question, let's just make it blue. I think it's nicer to see. The second question is, if I'm long, where? And if short, let's just do that there, where? Just because we should be going long based on climate doesn't mean we just buy right now. Because what's the likelihood that right now, the time of day that you're free to sit down and click a button is the best time of day to buy something? Or right now in a year, the day that you get your bonus or an inheritance or, I don't know, extra bit of money comes through, or just the day you randomly decide to invest happens to be the best day for you to get into a trade or to get into an investment throughout the whole year. It's unlikely. We never really want to just be buying or selling right now at whatever the price is right now, because it's unlikely to be an efficient place to do so. The more efficient we are with where we buy and sell, the lower our risk, the higher the probability, and the higher the reward we can have. So if we're going to go long, where should we go long? If we're going to go short, where do we go short? And how do we answer that question? We're also using technology to help us with this in the form of our UFOs. So on the screen here, we have UFOs. I'm going to see if there are green ones. There we go. So we have red UFOs. Weird arrows. Red UFOs there that are showing us where that is a concentration of sell orders. UFO stands for unfilled order. What that means is there is a big stack, or there is likely to be, based on the technology analysing many different data points in the market, there is likely to be a stack of sell orders there waiting, so that if price was to get up here, let's say to this one, it's likely to hit a big stack of sell orders and come down. Same true, obviously, for this one here. We have a stack of sell orders, as shown there by the red UFO. It's meaning that there are likely to be sell orders that push price down if price were to get back to it. Same is true, but reversed for the green UFOs. Green UFOs are where we have buy orders, again, that are likely to push price up. So these are showing us where we have these higher probability, lower risk, higher reward opportunities to get into that market in the direction that the autoclimate tells us what to do. Again, technology is taking care of the majority of this for us. We don't really need to think that hard. So if we're going to go short, we need to look for the red UFOs. Now, we now have multiple different UFOs. So which one do we choose? Again, we need to have a rule. We need to use technology that helps us answer this question easily. The more we have to think and confuse ourselves and have choices when we have trading opportunities, the more likely we are to get overwhelmed, either not make a decision or make the wrong one, be frustrated, not stick to a structure, not stick to our plan, and it all just doesn't go very well. So if we have multiple choices of UFOs to pick, which one do we pick? We use the EMA to tell us this. So I have an EMA value here of 38.71. That is the 9 EMA. EMA stands for exponential moving average. The 9 EMA means that it looks over the last 9 data points. So in this case, it's a weekly chart. It's using data from the last 9 weeks. So the EMA value here is 38.71. Why is that important? Now, usually the EMA can be used by retail traders as well as fund managers around the world for their entry points. But again, we don't just want to take just the EMA for an entry point, nor do we want to take just a UFO for the entry point, because it can be a little bit arbitrary. Put those two things together, you end up with higher probability. Again, it's all about probability. So if we have an EMA value of 38.71, which would be around about here, I guess, then we want to look for a UFO that envelops that. Now, you'll see this one here. The numbers that it's showing us here is 38.79 to 39.06. Now, that is showing us the numbers that are within that very small inner circle there in the UFO, where the highest concentration of orders are. But the UFO itself, the band itself, may be wider than that. So all we need to do is just click and hold on the edge. I'm just going to freeze that. Click and hold on the edge of the UFO, and it comes up with this little rectangle. Now, on here, we see the beginning price and the end price. So the beginning price here is actually 38.69. That's the bottom of that rectangle, bottom of that band, and it goes up to 39.06, which is the top of that band. So 38.72, it's just moved slightly, is definitely within those two numbers. Now, the cool thing about that as well is 38.72 is literally just inside that UFO, which is good because price is currently here. If price were to move up quickly, the EMA wouldn't move too much. And because it's at the lower end of the UFO, even if it does move up a little bit, it's likely to still be encapsulated within that UFO. It's likely to still be between those two lines. So this would be a trade that is lining up with everything that we need it to line up with at the moment. Now, a couple of things to bear in mind. Of course, if price moves up slowly, then the EMA is likely to move up with it, and potentially the EMA would end up being outside of this UFO. If that happens, that invalidates the trade. We want to cancel it at that point. The other thing is that it may be that it hits this stack of UFOs, comes down a little bit further first before coming back up. Again, if that happens, the EMA is likely to sort of move with it, move again. Potentially we have time for the autoclimate to change. So we need to look at these moving parts. But for the time being, we have a valid trade in front of us here with this UFO right here. So there are different ways that we can do this. I'm going to show you how I do it. I have customized my Fibonacci lines just to be 2 lines. I had a question from the last time I did this session asking me why I use these Fibonacci lines or how I use them to identify a trade. The answer is I don't use them to identify a trade. I don't use them for anything other than drawing. The reason I want to draw it on the chart is because as price comes up and hits the UFO, once the UFO or once the AutoUFO app recognizes that the orders are filled, no longer unfilled, and it's therefore no longer there, the UFO will disappear. So if I don't draw around it, it might be hard for me later to come and figure out where I got into my trade, where I got out of my trade, where my stops and targets were. So in this example, I am literally just going to use the drawing tools to wrap around this UFO. So we saw, and if I click and hold here, the entry price, I'm going to use this bottom number here, which is that bottom number of the UFO, 38.69. Now the end price, 39.06, that's the top of the UFO. That would be the reference used for my stop, but I'm going to add 10 cents on top of that, just to give it a little bit of wiggle room. So my entry price is going to be 38.69, and my stop is going to be 39.16. So if I just double click on these lines, again, I've customized them. I'll just show you here. Just show you on the settings tab. I've customized them to literally just be 2 lines. Normally you would have these other things check marked, but I just unchecked them and customized it that way. If I go to the data tab, I can use this data tab to literally tell it where I want those lines to be, so I don't have to fiddle about and draw them. So we had 38.69 was our entry and 39.16 was the stop. So I've just typed those in on the data tab here. If I click OK, you see those lines have now moved. They're now circling or sort of over, highlighting that area that we have there of our UFO. And it shows me exactly on the right-hand side what the numbers are. So I know what my entry and stop numbers are. Now, great, I know where I'm going to get in. So I know where I'm going to sell short if I was to get into this trade. And I know where I would buy it back with my stop. But I need to know where am I going to take my targets. So we have different ways that we can do this. For me, I'm just going to use the simple 1 safety target and 1 final target. We'll do the safety target first. I'm just going to bring up a calculator here. Here we go. So in order to figure out our safety target, what we normally do is just put our safety target 1 to 1 away, and we put half of our position on it. Reason for that is because if price moves 1 to 1 away and then stops us out, the worst that happens is we break even. If we didn't have a safety target and we had a target 10 to 1 away, price might move 1 to 1, 2 to 1, 3 to 1 away, and then come back and stop us out, and we've lost money, despite the fact that it had actually gone in our favor because it hadn't yet hit our target. So we do our safety target to just lock in profits quickly and early, so that the worst that happens after that point is we either break even or we make money, either way. So in order to figure out what the safety target is going to be, considering it's 1 to 1, we need to know the difference between our entry and stop. So I'm just going to take this here, 39.16 minus 38.69. That is 47 cents. So 47 cents worth of risk per share. Now, of course, if you were to sell 100 shares, then you would be risking 47. If you were to risk 1,000 shares or 10,000 shares, then again, just add zeros to that. If you were to risk 2 shares, then double it. So it's all to do with the amount of shares that you are willing to risk based on your trading plan, based on what you are comfortable to risk. So in this case, I'm risking 47 cents. So all I need to do in order to find out where my safety target is just minus that from my entry price, which is 38.69, and I get 38.22. That's now my safety target. Now, again, I like to draw them on the chart so it's easy for me to come back to. I'm going to grab this horizontal line, draw it on the chart here, around about, oh, I did it exactly. Brilliant. It was 38.22, wasn't it? Great. I was going to show you how to click anywhere on the chart, and then you could just double click on it and change the data again and just type in where you want it to be. But turns out I was very accurate there, so we'll keep it where it is. 38.22. I'm just going to make this bigger for you guys to see it a bit more. So that's our safety target. But what if this market hits that UFO and then drops like a rock? We want to be able to capture as much of that movement as possible. So again, where do we put our target? We could literally put it anywhere. We need to have something that is more solid as a stock, to give us that objective reason to take money out of this trade. So we're going to come over here to our bigger time frame. This is our weekly time frame, and I'm just going to add in my studies the AutoUFOs. The reason I'm doing that is because the AutoUFOs on here will show me where there are stacks of orders on this bigger time frame. So where there are bigger stacks of orders. So we'll see here that we have a UFO just here. This is a big stack of orders, big stack of buy orders. I'm going short. If I have buy orders, I want to get out before those buy orders, because those buy orders are likely to turn price back against me. So I don't want to still be in that trade after that. So I'm using this chart and I'm using the UFOs to show me where I want to get out before I hit a big stack of orders that could change the market against me. If I click and hold here, we see the top price of that is 32.37. That's what we see it here, 32.37. So that would be our final target. So let's just minimize that. 32 point, what was it again? I can't remember. Is it 32.77? 32.37. There we go. So I've just drawn a random line, double click on it. Oh, don't know what happened there. Double click on it. Opens up the data tab, 32.37. Now, something to bear in mind here, that's now quite a way away. Price would have to move quite far in order to reach that. So it may be that you trail your stock behind your target or behind price. It may be that you get out sooner than that. It may be that it goes there very quickly. Maybe that you're in the trade a long time. It's up to you to manage your risk based on what makes more sense to you, based on your psychological profile, how patient you are, your goals, and all those kind of things. But that would be where our final target would be. So you can put this trade on your TradeStation account. So obviously I'm using TradeStation here to do the analysis. Or you can put them on through other accounts. Now, I'm going to show you on TradingView. We just bring that up. I'm going to show you on TradingView. It was GDX, wasn't it? Gold miners. There we go. I'm going to show you on TradingView how easy it is to put trades on and to also do a lot of the calculation and the math for you. So we have this section over here, which is the order panel here on TradingView. I'm connected to paper trading down here, but the good thing about TradingView is clicking on that button there at the bottom. You can connect it to whatever broker you have. So you could connect it back to TradeStation if you want, so that you execute on one platform and do your analysis on another. For some people, psychologically, that's easier to separate those two activities. It could be that you connect it to another broker that you get really good commissions on, or another broker that you've used for years that you like, or maybe a broker that's connected to your, in the UK might be your SIP account, or in the States, I guess, 401ks or long-term investment accounts. Whatever, as long as it's on the list of brokers on TradingView, you can link it to that so that the trade that you place through TradingView goes back through the broker that you want it to go to. So hopefully that makes sense. So now that you're on this chart, on this page even, you can just click on whatever you want to do. So in this case, I'm going to click sell. Now we had a place where we wanted to sell. It was 36.69, was it? I'm going to double check that. Obviously, we want to make sure we do this right. 38.69 and then 39.16. So 38.69 and then stop loss was 39.16. Now the great thing here is this is showing us what we are risking. If we were to go short with one share, it tells us what we're risking. So we did that on a calculator, relatively easy to do, but again, this is even quicker without you needing to do that, telling you per share what you're risking. Now, the other cool thing with TradingView is that you can tell it how much risk you want. Every single person is going to have a different amount of dollars or pounds or euros, whatever currency you're trading in, that they are comfortable to risk. If you are happy to risk $100, you will trade a different amount of shares than somebody that's happy to risk $1,000 or $10 or $2 or $50 or whatever. You're all going to have different numbers that you're comfortable with, which is going to be based on a percentage of your account or how aggressive and conservative you want to be. So let's say, for example, just for ease of round numbers, somebody said that they wanted to risk $100. They can just type in $100 there and it will tell you how many units you need to trade, i.e. how many shares that you would need to go short in order to be underneath that number. So again, you can use the TradingView tools here to be very, very specific with your risk. Now, in this case, rather than tell it how many dollars I'm going to do, I'm just going to tell it that I want to do 50 units. The reason I'm saying 50 units is because I'm going to generally go for 100 shares worth each time for the total trade, but we have two targets. We have one safety target, one final target. So we need to split our total risk in two. So we put 50 shares on one of our trades and 50 shares on the other one of our trades. It's the same trade, but different targets, but they have to go in as separate trades. Hopefully that makes sense. Let me know, by the way, if I've lost you guys, if I sort of confused it a little bit there, but hopefully that makes sense. So our first target, let's just go back to our chart here and check, was 38.22. So we're just going to click take profit and we will type in 38.22. Now again, the good thing with TradingView is it's now showing me here, this number here is showing me what the ratio is between the difference between my entry and stop and the difference between my entry and target. So in this case, it's showing me 1, which means I know that's definitely where my safety target needs to be, exactly 1 to 101. All I need to do now at this point is just click sell. And you will see that has now gone in on my trading account there. I'll just zoom a little bit, make this easier to see. There we go. So you'll see that's now gone in as a sell limit for 50 shares. I've got my stop loss and my take profit there as well. So that is the one trade. We now need to put on the second one. So again, this is going to be 38.69. That's the same. The stop loss is 39.16. That's the same. The difference is our profit, where we're going to take our target. We also want to tell it that we want another 50 units. So again, 50 on one, 50 on the other. And our profit target in this case is going to be 32.37. So I'm going to come over here and put in 32.37. Again, that's a 13 to 1 trade. So if that were to hit, that would be pretty decent. We'd be happy with that. And again, you just click sell. Pretty easy. You now would have seen this. Obviously, the entry and stop have gone in over each other, but you'll see the take profit one down here. So that was GDX. Hope that helped you out, Ron. We had a good opportunity there. Thanks for that suggestion. We've got a couple more minutes, so let's just have a quick look through the scan, unless anybody has a burning desire to look at another one. We said at the start that general markets were to the upside. So let's look at a couple of stocks that may suit us there. So again, we run the scan. All we then need to do is click on the symbol on the scan, and this is the scan that's showing us good long opportunities. Click on the symbol and it will bring up a chart. So this first one, just obviously in alphabetical order there, we have AA, which is Alcoa Corp. I hope I said that right. So we're just going to do the exact same process as we did before. We're going to look to our auto climate to tell us whether or not this is a good idea, and then we'll go from there and follow our structure, follow our pattern. So we have a thick blue dot, confirmed upwards climate, probability to the upside. Normally, this stock would go up for 6 candles, and we're on candle number 2. So we have probability of a continuous move up, so that's good. We also have correlation on our side, which is also good. Our EMA is 14.86, so that would be around about here. So again, really easy to tell you, there are no opportunities here at the moment. We do not have a UFO that envelops the EMA. Of course, if price were to move down here, the EMA could move with it and end up being within this UFO, or perhaps maybe even within this UFO. But at the moment, we don't see anything that lines up. You can definitely set alerts and come back to it, but we can just move on from here and just click at the next one. Again, this is the beauty of using technology. It's very quick and easy to see whether or not we have an opportunity. And if we do, we know what our steps are. And if we don't, we just move on to the next one. So it's pretty easy. So in this one here, once again, we have a thick blue dot on our auto climate. And normally this market would go up for 11 candles. We're on candle number 1. Probability of a continuous move up. Brilliant. Which means we want to look for opportunities to go long. Doesn't look like we have many UFOs close by. The EMA is 17.92, which is round about here. Again, no UFOs within that, so move on. I'll try a couple more, see if we've got any other opportunities. But again, just to show you this process of how easy it is to use this technology and just move through and see our opportunities and take them, or see that there are no opportunities and move on. Same thing here, again, not surprising considering the general market movement at the moment, that we have a long opportunity. We have or an opportunity to look to go long. We have a thick blue dot, confirmed upwards climate. Normally the market goes up for 8 candles and we're on candle number 2. So again, probability that it continues. The EMA is 55.16. So that is going to be around about here. Now, I doubt it's within this UFO. Let's have a look. Oh, it moved. It's right about there. No. Okay, so at the moment, the EMA is just below this UFO. Now, that means that this trade would be or wouldn't be valid, because as price moves down to enter into the UFO, that EMA is also going to move, which means it's going to end up being in the middle of nowhere. And again, we want those two things to line up as we take our trade. So we would just move on. Hi there, Furman. Just seen that saying morning. Good morning. Hopefully you can catch up on the recording of this as well. Just see on there from Marie. Explain everything so clearly. Cool. Can we add stocks that we follow to the scan? No. So the scan itself is just looking at the technology. It's looking at just objective data. So good question. You could definitely have your own watch list though. So let's say, for example, you also look at, let's just say Facebook, just because that's obviously a well-known common stock to be traded. Let's say you also look at Facebook. There's nothing wrong with you checking Facebook out as well, and looking at the opportunities that are there and looking whether or not you want to do something. But the scan itself is going to be looking at just objective data. So it won't add things in there that don't fit that criteria, if that makes sense. But again, nothing wrong with you having your own watch list and looking at that as well. So just whilst we're on Facebook, let's have a quick look. So we have a thick blue dot. Usually the market goes up for 9 candles and we're on candle number 2. So again, probability there to the upside and for a continuous move upside. The issue we have here with Facebook, which is why it wouldn't have appeared on the scan, is that the EMA is 272.11, which is above current price. If the EMA is above current price, then we definitely don't have buy UFOs there, because buy UFOs are always either at or below current price. And if we're going to go long, we need to go long at a buy UFO. So that's why it wouldn't have showed on the scan, because it's saying, well, the EMA is above price. You're not going to have any opportunities there. So again, that's why the scan helps us to sort of eliminate a lot of the trawling through, looking at different things just because we think about it or just because it's on a list where there may not be any opportunities to look at. Instead, we just look at the objective data that tells us where there are opportunities. But again, nothing wrong with having a couple of your favorites. Okay, so that brings me to the end of the session. I hope you guys had fun. I hope you guys learned something today. Thank you, Ron, again for your suggestion there with GDX. We have that trade in. We will look at that in a couple of weeks, see what happens, see if we get triggered into that trade, or see if we got stopped out, or if we missed it, whether it needs to be cancelled. We'll come back and look at that. Again, make sure that you guys keep a lookout for other types of sessions. I'll just show you quickly here on the tradewithufos.com/join. You can come here to look at the apps, memberships and courses, so you can do that. If you go to the live get together, you will see the upcoming sessions that we have with the other instructors as well for the other sessions. So for those of you that are potentially into day trading, maybe day trading futures, you can have a look here to see when those upcoming sessions are. We've got futures now that starts tomorrow, so it's not now, with Bo. Sorry, not tomorrow, on Monday with Bo. You can also see the FX sessions that we have, and options and psychology sessions as well. So take a look at the calendar, see what we have coming up. I'll be with you again in a couple of weeks. If you have questions, you can go to tradewithufos.com/Becky so that other people can see the answers to the questions, or you can email me. Just seeing there, watching you on subscription from the beginning, but switch to YouTube so I can see comments. Okay, cool, brilliant. Again, if you have any other comments or any other questions, it's always good for them to be publicly there for other people to see what the answers are, and for them to also feel comfortable to ask questions. So by all means, join us on YouTube, ask questions publicly, so everybody else can see, make comments. We love to see you guys engaged, and we'll see you in the sessions upcoming. I'll see you in a couple of weeks. Happy trading, guys. Have a good weekend as well, and take care.